And someone had mentioned, oh, do you think this is a good idea? Going back to the 3-month or 4-month chart I had, 3-month chart I had, excuse me. Someone had commented in, well, if you can see the range is just between 37 and 21, do you think it's a good idea to trade Iron Condors on the VIX? Sell a bear call credit. So I think what they mean is selling a bear call credit spread, maybe by selling the 38 call and buying, let's say, a 40. And then selling, let's say, the 19, maybe even the 18, selling the 18 put on the VIX and buying a 16. No, I don't. Could it work? Yes. Could I be missing an opportunity? Yes. Am I comfortable enough that VIX is going to stay within these ranges over the next 15, 20, 35 days? Absolutely not. Absolutely. I am not. I am not confident that it's going to stay within that range, and it's going to stay range bound, even though it has the last 3 months. And as I even said, we see it go up to 35 or so, and then it comes back down, and then we see it bottom out at 20. Usually, I think the average bottom is about 22, and then it comes back up, and then it comes back down. No. Any sudden news, any sudden change, any sudden development overseas markets, the U.S. market, any sudden news that comes out that says, oops, things were worse than we thought, you could see the VIX go up to 45. You could see it go to 50. During the pandemic, I think it went to 95. Did it cross 100? I can't remember. I think I've blocked it out. Let's go back 3 years. 85. Okay, I thought it was 95. It looks like 85 there. That's going to be March 2020, right? February. Yep, going into March of 2020. That was the high. Now, I'm not saying we'll see another pandemic outbreak. I'm not, in that case, that's going to be as bad as this, and we're not going to see shutdowns. I'm not saying that. But something could be just as devastating to push it up to 45 or 50. And the risk for me is not worth it. Could I be missing out? Yeah. I mean, that's a possibility. Doing an Iron Condor in the VIX, say, staying even at 45, where there's probably not going to be much premium, and 10, probably not much premium, might be a safe bet. But I just don't want to take the chance, because you're going to be taking so little premium if you set too wide of a fence here, that if there is that spike up to 50, 55, or 60 from a complete unexpected black swan event making everything worse in this case, you're going to take a huge loss there on that Iron Condor, and that's going to wipe out any gains you might have made. Just not comfortable enough for me to do that with something this volatile. I'm not saying just buy calls on it either. I'm not saying buy puts on it. I'm sure there are investors that are trading, and maybe even floor traders, likely floor traders, that are trading Iron Condors, maybe butterflies even on the VIX. I'm just not comfortable with it as a personal question. So I'll say that, David. I'm sorry, David, I'll say that. I'm not comfortable with doing that, even though you see a range-bound thing. Any news will cause that to fluctuate wildly. All right, Kenneth. Is SOXL the index? So I have to do $SOXL. Let me just take a look here. I guess not. That's not optional. There we go. Tough question. And I'm not allowed to give direct trading advice. Okay, the reason why I'm saying this, what Ken's question is. No, I'm not. I just looking at the chart, I'm not. Ken's question is, what do you think about selling cash secured puts on SOXL in the current environment? Even deep OTM strikes pay great premiums. I am not comfortable with this. I wouldn't do this, okay? I don't have a great insight into the semiconductors, and the last two semiconductor plays that I did worked out great for about 2 months. They were married puts. Worked out great for 2 months and then came back to haunt me. The one that I'm in right now, it's a year old. I legged into it after the put was going to expire. It's a smaller semiconductor. Where am I going with all this? I'll explain where I'm going with all this in just a moment. There we go. ESI. All right, it's a smaller price one. Element Solutions related to semiconductors. It's at 20. It's been as high as 29. As I've been in this trade, see, I've been in this trade for 230 days. Why am I staying in this trade? Well, number one, I have no risk on this position. It's a bulletproof married put trade. I have the 30 put. My cost basis on the stock is 24.38. I rolled up from the 25 to the 30 put, generated some income along the way. That was only 540 when the stock was up near that 28.50 range. So I have a guaranteed, it's actually closer to 1.5%, I think, on the Fusion portfolio because I've added extra calls to it. This put now is so deep in the money, and it's coming up in 7 days. But for the past 2 months, I've been trying to sell it at midpoint and sell it at a price I'm willing to get because midpoint was even below intrinsic, and it would never, ever bill at all. And so I'm just staying into it. So I'm going to exercise the thing. Going to exercise it there and go that direction. Okay. So this was a stock that did very well for me in the beginning and then did nothing, and now I'm stuck with it. The backlog is still too big. Getting the materials for the semiconductors is still too what if. Oh shoot, I'm sorry guys, I was out the wrong window. And this is one of the reasons why I'm not adjusting this position. This is one of the reasons I was tempted to open a married put, on AMD a little while ago, but I'm just still not confident that this necessarily is over. I don't know if, even though we saw some of the indicators there go from that very bullish buy to a light buy, as some of those valves eased off with the day's movement in the market, I don't know if it's a constant trend. Okay, I don't even know if it's going to be a constant trend or if it's just really going that direction, if it's just an aberration. Is it just a sudden pop to ease those things, and are we still going? Is there more downside left to be? Okay, in that case, that's what I'm looking at. Kenneth, even the deep out of the money ones, do I think this would go below 10? Maybe not. Is it possible? Yes. Got to see what the supply. Remember, this is the bull 3 times ETF, so it has a chance to rise quickly if there's good news that comes out, Kenneth, but then it also has room to come back very quickly. So what I mean by that is if it starts this trend like it did last time, when it went from 30 up to 45, if we go from 20 up to, say, 33, it wouldn't surprise me if supply chain issues and other things related to that still exist and it comes back down to a lower level. That wouldn't surprise me. Okay. It also wouldn't surprise me if we see this go back up to 50 if those issues start working themselves out, the materials and the supply chains for the semiconductors start getting better, start seeing better production, start filling more orders that they can in that case, and we'll go there. Okay. Edison, this is an easy question to answer. You said, Mike, what's your opinion on buying some QQQ at this time? If I'm buying anything at this time, it's only as a married put or a collar. I'm honest, and I've always been honest with you guys. I don't really trade too many covered calls anymore. I do some cash secured naked puts, not doing anything right now. If I buy anything, QQQ, SPY, AMD that I just mentioned, let's take a look at the married put search, what comes up here for a default search following the radioactive trading techniques. Ashland, that's one I was looking at earlier. Darling, I liked, but I'm glad I didn't do it. Funko, that moved up higher today. I'm kind of interested in this one. Why? Because my kids have some of these things. These are those little vinyl bobblehead dolls, you know, that they do, and they do it based on characters from movies and characters from video games and all that other stuff. I didn't even know what they expanded to. Their earnings were phenomenal, and their outlook for the next quarter was phenomenal. And no, I'm not going to say it because it'll sound like I'm making a recommendation or suggestion. So that's not what I wanted. I was considering opening a married put this week, and it was going to be Ashland or Funko. I'll say that directly. So the Fusion subscribers are going to see something come out next week. Sorry, what am I doing? I'm going to the big charts. I'm sorry. And you know, it's been in a trading range too, but it had this sudden move and then it pulled back with the rest of the market, but then it had a bigger move today. I mean, the MACD, let me go to the 1 month. This is not a recommendation or suggestion because what did I say, Edison? If I do open this position or the Ashland position, it's only going to be opened as a married put position. I am not buying shares outright of anything. I am not doing a covered call or cash secured naked put. I don't have enough trust yet. 2 to 3 days from now, I might have better confidence in what we've seen the market change and the market direction. Right now, I do not. So anything that I'm opening is going to be on a married put position, probably taken directly from this list. KRP came up in another search. It was a bull put credit spread or a covered call. I can't remember. But I was looking at that one too. SMCI is a good one. It has been moving up too. So that's a super microcomputer. But I don't even know that well. But yeah, Ashland, Darling I was looking at, but it's been all over the map. Okay, so Edison, anything I'm doing now is going to be any shares I'm opening that aren't as part of a broader market hedge, as I mentioned, in shares of UVXY, shares of VXX. Anything I open now is going to be done as a married put. I may miss opportunity. I may add to cost basis. I'm so sorry, Edison. If I were to open QQQ right now, it'd be as a married put. But again, as I mentioned, I'm not sure if this is a bottom. I'm not sure if this one push up is even any type of trend. You don't want to get caught with false signals. If you do want to get something now because you feel it's bullish, do it as potentially a married put position to leave your upside open, but have the locked in guaranteed protection in place. Or to get some income, do it as a standard long caller approach, 1 month, 2 months, 3 months out in time in that case. Whatever matches your preference and your return. I highly encourage insurance on any new stock positions. Maybe even doing if you're doing out of the money naked puts, maybe even consider adding a further out of the money put as a bull put credit spread just to keep control in place, just in case there's another pullback. My sentiments, of course, doesn't mean I'm right. I'm not trying to make a prognostication. I'm not trying to make a direct recommendation. I'm saying that it's important to protect your positions from what we've seen over the last few months. It's important not to go into too big of a position. Always practice proper position sizing. That is key. Don't risk more than you can because we could go right back to certain declines and certain things as well. I know it seems like everything is depressed and depressing, and I know we want to say, hey, we're at a bottom, things are going to come back up. I'm only opening hedged positions at this point, married puts, long callers, proper position sizing. And if I do decide to start opening some bull put credit spreads, the first thing I'm going to do is do minimum positions, minimum contract, not minimum one contract, but smaller contract sizes, proper position sizing. So each position does not risk more than maybe 2 or 3% of the total portfolio. And I'm going to be buying some puts on SPY as a hedge in case I'm wrong, or shares outright of UVXY or one of the inverse ETFs, 5 shares, 10 shares, to counter maybe a 50% loss if the bull puts move against me and the market turns back again. Okay, so that's the best way I can handle that question, Edison, is that the tech market still has some changes to go, some room to go down. Haven't checked the earnings yet. I don't know if any more big tech companies in the NASDAQ have earnings coming up. So I'm personally not opening QQQ right now. That should not be taken as direct recommendations or suggestions at all. Anything I'd open right now is going to be done in a married put. There's a potential that 2 more married puts are going to be open next week in the Fusion portfolio. You already heard me say the ones that I was thinking about in those cases. I do want to remind everyone, of course, that today's material are my thoughts and your questions designed for educational purposes, increasing investing performance and options knowledge. Any stocks or options discussed today should not be taken as direct recommendations or direct trading suggestions. But strategy-wise, it is always my recommendation to open new positions as a married put or a collar position to control risk and be safe up front. That I will say is sort of a recommendation or suggestion. Options involve risk, may not be suitable for all investors. All right, well, we had a chance to go through the search tools today, both for John and for the later questions that came in. We saw a little bit of the portfolio and some of the research and analysis tools. If you like the tools you saw today, just remember you can take a 14-day free trial at any time. All you need is your name and an email address. No credit card is required. You'll have full access during that trial to the patented search tools, the different signature tools that we have, the portfolio tools, and more. In addition to that, of course, you'll also be able to schedule the coaching sessions and more. After the 14-day free trial, subscription levels only start at $45 per month, and that's for the end-of-day data service. There's, of course, a benefit to the next level, which is the delayed service, where the trades are updated every 15 to 20 minutes. As well, the historical service includes everything that's in the delayed data, but with access to the full 7.5 years of the historical data for the historical searching as well. You can cancel at any time. There's no contractual obligation. Trial members and subscribers can schedule the coaching sessions at any time. That's a free 35 to 45-minute phone conversation with myself or Ernie, and you have full access to the various webinar archives as well. Of course, in addition to that, mentioning the archive webinars, you can check out the webinars page and the 4 different tabs there: tools, strategies, concepts, requested topics. And as we saw, you can also go to the YouTube channel, just run a basic search there for stock or portfolio insurance, hedge, portfolio hedge, covered calls, naked puts, to see various presentations on criteria, structure, management techniques, and more. Of course, you'll also be able to check out the playlist there, the strategy playlist we talked about at the beginning of the presentation. Now, if you think of any other questions, remember, send me an email at any time to support@powerop.com or support@radioactivetrading.com. You can also call us during market hours at 302-992-7971. Of course, trial members and subscribers can always schedule one of those free coaching sessions at any time as well.